Hey guys, it's Sean at eMiniSchool. It's May 9th right now, Sunday. Right now as I make this video, the ES is up 22 and the NQs are up 35, TF up almost 14 pre-market. So what I want to go over, on April 25th we emailed everyone on our list and we said 1216 on the ES was a very important high. So let's look at a couple things here. Um, so here was 1216.50 right here. Okay, so April 25th we said 1215, 1216 important level. Okay, we also have a higher level which is 1225, 1238. So I guess it's not on this chart, but it's 1235 or actually 1228, 1235 area. Okay, so this this level right here still could be hit. This low that was made on Thursday, okay, there are numbers at that low. So it's still a calculated pullback, okay, compared to the overall direction, okay, which is still up. Now, I'm not saying that just go long right here. Um, we've been following this move with our nightly videos with our members, so we've had this level for a long time. But there's been other levels, okay, along the way. 1216, 1215 area was a bigger standout than any other high up to this level. Okay, so the outlook that we have for our members is basically the market is going to get probably pretty wild from this high to this low. Okay, meaning anything in between is going to be very emotional. Okay, the more we come up, and if we don't, start coming up hard, a lot of people are going to jump on short. Okay, because of what happened Thursday, thinking this has to be the top. Okay, it doesn't have to be the top. It could be the top, but that's why we want to just stick to the charts and trade it one day, 1 week at a time, and always have an outlook and trade that outlook that's calculated. It's much easier than just saying, okay, Thursday was a really bad day and this has to be the top. Okay, a lot of stock charts do look like they could be topping, but they do have upper targets still as well. So the outlook is we still have upper targets, okay, but until we really break this low and break this low, all these other lows are very minor, okay. This low is much more substantial than this low right here. And I know a lot of people, send out emails, whatever, and they, okay, we broke support here. Okay, technically, yes, it did break support there, but you can't just look at it as simplistic as that, because that's saying, okay, we broke support, now what? Okay, yes, the market goes down a little bit, but it's not going to just keep going down because we broke support here, or we broke support here or here. Those are just minor. So yes, we did fall off of that. So it's tradable, but the next question is, where do I get out if I did short here? So there's always two sides to each outlook or each story or each trade. And the key is, in my opinion, is knowing if you are trading, if you're day trading with the bigger trend, or if the bigger trend is correcting. Okay, so if the daily or the 60-minute is in a correction pattern, okay, that means the 3 and the 10-minute are going to be choppy. So knowing if the bigger time frame is impulsing or correcting is very, very key if you're day trading, because every trader wants to get into every single trade thinking it's going to be a home run. And that's really not the best way to look at it, because if the daily or the 60-minute is correcting, the 3 and the 10-minute trades are not going to be home runs. Okay, they're going to, for an example, let's say, the 60-minute is correcting. It's correcting down. Here, let's go back a little bit where it's like a choppy correction. Okay, here. Okay, correction pattern. Okay, impulse, correction. So if we're correcting on the 60-minute, if you go long the 3-minute here, it's going to come up and then it's going to run right into 60-minute resistance. If you short it here, it's going to run right into 60-minute support. So you can't really trade every trade with the same outlook of, I want it to be a home run. Of course, we want it to be a home run, but 9 out of 10 times it's not going to be. So correction pattern on 60-minute. You trade less contracts on day trading on your smaller time frames, and you're more aggressive with the stops, and you're going to take the profits at the targets. You're not going to just let it go. A lot of people teach, trade 3 contracts, scale out of one with 2 ticks or 3 ticks, scale out of the second one. It doesn't really make sense to me because I don't really want to enter a trade for 2 ticks regardless of anything. I want to enter the trade for points, 6, 7 points when I'm day trading. I don't want to take 2 ticks. It's not worth my risk. Even though it's only the third of the contract, I'm still risking a third of my position to only get a little bit. So I kind of went off the subject, but basically the outlook is from this high to this low, knowing this low was calculated in the correction, it's substantial. So until we really break this low, our outlook is very choppy, very emotional. People are going to try to short as it pulls up, okay, and we might come back down, and that's what's going to make it choppy. Okay, people are going to commit, they're going to be wrong, and it's just going to be very choppy. But with this upper level still there, until we break this low, it is still there. So the more people that commit short in this zone, the higher odds we're going to hit this level. Okay, the higher odds we're going to squeeze up to it. And it could happen overnight. It could happen, out of nowhere during the day, just like we're up 20 points on the ES right now and it's Sunday. That's happening, no one can really do anything about that. You're stuck short. So we're not committing to anything major in this level, knowing that it's going to be very choppy. Ranges are going to be very big, and the more people that commit short here, the higher odds we hit this upper level. So our outlook is just, trade less size, and we're only trading the second session, which we go over in our course. Let the first session of the day go by and trade the second part of the day. It's a safer trade going into tomorrow and probably for the next week. Have a good weekend.